Hey, thanks for joining. Let's talk a little bit about Solana. The purpose of this video is really just to see if the bottom is in. So let's dig in. So we've got three different panes, and on the far left, each of these candles are 1 year or 12 months. And then on this middle pane, each of the bars or the candles are 6 months. Then over here, each of the bars are 1 month. And by the way, each of these graphs, charts, are universally synced. And I say that because if you see this orange line, it's identical in terms of on each of the charts because, again, each of the charts and graphs are synced. But what I did is I thought this was interesting, so I placed this top of this orange horizontal line right here, which is resting on the top of these two 12-month bars. And then just in the last few hours, at time of recording, price came down to that orange line again, which is the top of the yearly bars, and reacted nicely. So I like that. And then if I swing it over to the middle pane, these are 6-month bars. And what's interesting is these 6-month bars look very similar to these yearlies, but we've got price as well resting nicely on top of these. And then here is price action just above that orange line. And if you can see this, by the way, this black dotted faint line is price action. Kind of tough to see, but price is just trying to get above that wick of this 6-month bar, which also applies right there as well on the yearlies. Now I'm over on the right pane, and these are the monthlies. And so what I thought was interesting is we had a monthly bar right here, but price actually continued to fall through, but where the orange horizontal is acting in this case as a support, and then now we had an SR flip. So now this orange line is acting as overhead resistance. So here is the orange line with price action resting above it. And then we've got this nice bar right here that's resting on it and the orange line right here is acting as support in these scenarios. But in this scenario here, this orange line is now acting as overhead resistance. So when I look at this from a zoomed out view, this looks like this orange line is now acting as support. So now what I'm going to do is I'm going to zoom into a different platform that's not TradingView, but you'll see here in a second. But I'm going to focus in, we're going to really zoom it in because remember, these are monthlies, but I'm going to zoom in really from this time frame, from right around summer of 2024, which is going to take us again right around this section right in there. So just remember that when we flip over to this next platform. Okay, so I have flipped over to a different platform other than TradingView. We're on the 240 minutes or the 4 hours, and I'm using Coinbase, if you can see that, as the exchange. But I placed the anchor for the Elliot wave counts. This right here is August 5th of 2024. High level, just let me walk you through the wave counts. But I've got, this is the beginning of wave 1, and here's the completion of wave 1. And we have this nice looking ABC correction to finish off the second corrective wave. Then up here, this appears to me to be the finish of the third wave. Let me walk you through that. So here's wave 1, 2, 3, and then 4, and then coming up here to finish the 5th, which completes this third wave. And then after each third wave is a fourth wave, which is also corrective. And if we walk our way, through that, this looks to be like an ABC correction. So we've got A, B, and down here is C, which I don't have it in here. So we've got some confluence going on here. The reason why I think this is the bottom is two things. Number one, to see this, we've got the classic 618 golden zone from a retrace standpoint, and the price at that is $175.56. And you can see price came down to the golden zone, actually came to the bottom of this channel. And I'm going to talk to you about this channel in a second, but came down and wicked the channel. So it looks like there's definitely some buying activity. So I love that. And not only that, we've got a double bottom. So here's one touch as well as the second touch. Now let me just touch on this channel real quick. So this channel started in September of 2024. Let me just walk you through. So we had price come up to touch that, respect that. But then what I did is see this middle or this blue dotted line. I put that in there. This is the midline of this orange channel that we are in. The reason why I like that is this. One, it got hung up right there, got snagged a little bit, but then eventually turned to the upside. And then right here, price respected it nicely, had a nice little bounce. However, when price came to right here, it fell through it, but then price came back up again and got kicked really hard to the downside. So this midline gives me a lot of comfort knowing that this channel, this best fit fib channel, it does make a lot of sense to me. Thus, when price came down here and wicked it, so now I just want to share with you something else that I found. And this kind of helps explain why we had such a violent reaction when price hit this midline. So you see this new downward channel that I just added in black. But if you see right here, this is where price action hit the midline of that channel. But not only that, it hit the top of this new channel that I just added. And when you get this like double confluence, and in this case, this overhead resistance, it just makes a lot of sense why we had this, again, this aggressive, to the downside move. So that makes sense. I'm going to get rid of this channel real quick. Let me share with you the risk I'm seeing though. That is, are you familiar with that, the up and handle pattern? Talked about that a few times, but it's all over Twitter and social media. It's a really, really common pattern in all of trading. But this, what I'm seeing is this is an inverse cup and handle. And so this whole section right in here is your cup. And then this whole section right here is your handle. And what I worry about is that if price, which we're right here, if price actually, let's say if price breaks below this channel, right around $169, $67, then what I worry about is that we could see this explosive move to the downside. And so we've got this 786 down here just lurking, which is the next logical retracement level if price decides to break through this 0.618 retrace level at 175, and this 786 is at $151. So that's probably my worry at this stage, but time will tell. So I think that is a wrap for now. So if I had to sum this up, I would say from a probability standpoint, I would give this about a 60% probability that the bottom is in. We just need a few more days of confirmation of going sideways or like a V bottom to validate again if the bottom is in. But I think we're close. It's been painful. And it really makes sense because these fourth waves and these second waves, these corrective waves, will really test our patience. So I think that's a wrap. If you have any questions or anything, just feel free to reach out anytime. And thanks so much if you've made it this far. I appreciate it.